Hi everyone, welcome back to my channel. Today we're going to talk about one of the most important financial institutions in the United States, the Federal Reserve. What is the Federal Reserve? The Federal Reserve, often referred to as the Fed, is the central bank of the United States. It was established in 1913 to regulate the country's monetary policy, stabilize the economy, and maintain the stability of the financial system. Structure of the Federal Reserve. The Federal Reserve has a unique structure consisting of three main components: the Board of Governors, the Federal Reserve Banks, and the Federal Open Market Committee, FOMC. The Board of Governors. This is the governing body of the Federal Reserve System. It consists of 7 members appointed by the President and confirmed by the Senate. The Board of Governors is responsible for overseeing the overall operation of the Fed. The Federal Reserve Banks. There are 12 Federal Reserve Banks located throughout the country. These banks act as the central bank for their respective regions and are responsible for implementing the policies set forth by the Board of Governors. The Federal Open Market Committee, FOMC, this is the policymaking arm of the Federal Reserve. It consists of the 7 members of the Board of Governors and 5 of the 12 Federal Reserve Bank presidents. The FOMC meets several times a year to determine monetary policy, including setting interest rates and controlling the money supply. Functions of the Federal Reserve. The Federal Reserve has several important functions that are essential to the stability of the U.S. economy. Monetary policy. The Fed is responsible for implementing monetary policy to promote economic growth, price stability, and full employment. The FOMC sets the target for the federal funds rate, which is the interest rate at which banks lend to each other overnight. Supervision and regulation. The Fed oversees and regulates banks and other financial institutions to ensure the safety and soundness of the financial system. Financial services. The Federal Reserve provides a variety of financial services to banks, the U.S. Treasury, and other government agencies. Monetary policy. One of the most important functions of the Federal Reserve is its role in monetary policy. The Fed uses a variety of tools to influence the money supply and interest rates in the economy. Open market operations. The Fed uses open market operations to buy and sell U.S. Treasury securities on the open market. This affects the amount of money in the economy, which in turn affects interest rates. Discount rate. The discount rate is the interest rate at which banks can borrow money directly from the Fed. By changing the discount rate, the Fed can influence the amount of money that banks have available to lend to consumers and businesses. Reserve requirements. The Fed sets reserve requirements, which are the percentage of deposits that banks are required to hold in reserve. By changing reserve requirements, the Fed can influence the amount of money that banks have available to lend. Supervision and regulation. Another important function of the Federal Reserve is its role in supervising and regulating banks and other financial institutions. Bank examinations. The Fed conducts regular examinations of banks to ensure that they are operating in a safe and sound manner. Consumer protection. The Fed is also responsible for enforcing laws and regulations designed to protect consumers in their dealings with banks and other financial institutions. Financial services. In addition to its role in monetary policy and regulation, the Federal Reserve also provides a variety of financial services to banks, the U.S. Treasury, and other government agencies. Check clearing. The Fed provides check clearing services, which allow banks to exchange checks and settle accounts with each other. Electronic funds transfer. The Fed operates the Fedwire Funds Service, which facilitates electronic funds transfers between banks. Currency distribution. The Federal Reserve is responsible for the distribution of U.S. currency and coins to banks and other financial institutions. The Federal Reserve and the economy. The Federal Reserve plays a critical role in the U.S. economy. Its actions have a significant impact on interest rates, inflation, and economic growth. Interest rates. The Fed's policies have a direct impact on interest rates. By setting the federal funds rate, the Fed can influence the cost of borrowing for businesses and consumers. Inflation. The Fed aims to maintain price stability by keeping inflation under control. Inflation erodes the value of money over time, so controlling inflation is an important part of the Fed's mandate. Economic growth. The Fed's policies can also have an impact on economic growth. By lowering interest rates and increasing the money supply, the Fed can stimulate economic activity and promote job creation. Conclusion. In conclusion, the Federal Reserve is an essential institution in the U.S. financial system. Its role in regulating monetary policy, supervising banks and financial institutions, and providing financial services is critical to maintaining the stability and growth of the U.S. economy. I hope this video has helped you understand the functions and importance of the Federal Reserve. Thank you for watching, and I'll see you in the next video.